Hey Ross World, today we're going to do a full review of Betterment. Something like Stash, but different in the way they do portfolios, but you're still investing in ETFs, but Betterment has a whole slew of other options for you to consider. So let's get into it. Why Betterment? Let's do an overview of it really quickly. Now, as we search through this whole website here, you're going to see a bunch of graphs and charts and columns to help you better understand with definitions supporting the way they do particular things. Now, I'm only going to read certain things to highlight, but as well, you can go to www.betterment.com. Better returns. The Betterment portfolio is designed to achieve optimal returns at every level of risk through diversification, automated rebalancing, better behavior, and lower fees. The Betterment approach to investing can help generate 2.9 higher return than a typical DIY investor, do-it-yourself investor. Okay. Then they have some advice across of your wealth. And once again, here's a chart, here's a picture. Customize your portfolio allocation. They advertise smart automation, scheduled deposits, automatic deposits, invest excessive cash. That really petty cash that you spend, you just blowing on particular things, and you can be investing into your future, whether it be building wealth, IRAs, or having a safety net of cash, which we'll get in very soon here. A smart investing experience on all devices. Yes, your laptop and your phone, and also your tablet. Okay, we're not, and here are the guys who is in charge of this whole thing here. You want to do some research on these guys. They're pretty much experts in the game, but the financial world's huge, so there's a lot of experts, but so far they're doing pretty well with Betterment. Okay, let's go back to the main page, and that's why Betterment. This is a brief overview of that, and they advertise what I love is no hidden fees, full transparency. Now, this is not a comparison to Stash, but I will be comparing Stash somewhat. I know, contradiction noted. But Stash, you start off with $5. With Betterment, you have no hidden fees, and there's no fee to actually start your account. As I'll get into my account, which I opened up maybe a couple of days ago. Technology is nothing without the people behind it. Basically, even though you're going through a website, you have real people working on your accounts. That's what that's all about. Then it has start your investment plan here. And this is exactly what I did. I went in here, I put in my age, I put in not retired and my annual income, and I hit let's get started. So instead of going through each tab here, which you can do for yourself, and you read about financial plan, retirement, RAs, trusts, the resources that they have, investing 101, which teaches you how the investment game work. You can read that for yourself as well. The research that they use, the tools and calculators, and also the pricing. So let's go into pricing before we go into the account and actually sees how the inside account works. Here it is. Includes unlimited access to automated portfolio management, meaning that when they see the best way for your money to make you money, they automatically adjust it based on the market. You don't have to do anything. This is awesome. You don't have to go in and, oh, let me put in this portfolio or this portfolio. They do automated portfolio management. Tax efficient investing features, advice cross your investment, award-winning customer support. And once again, 0.25% on the amount that you have in your account. Okay, but read down here, no minimum balance, cancel at any time, fees calculated based on account balance, just as I said. They have some additional plans here, and to reiterate, no trade fees, no transfer fees, no rebalancing fees, no hidden fees. And they all have their own little short definition of what that is. No charge to you based on your transaction. No charge to you based on you depositing or withdrawing money from your account. So if you build a bunch of wealth inside of Betterment and you want to take it out, they won't penalize you. Betterment automatically and regularly rebalance your portfolio for free, meaning what? They're there to help you to make more money, because when you make them more money, they make you more money, so on and so forth. It's a partnership. This is great. This is awesome. No hidden fees. Betterment fees are all inclusive, so you have access to all full suite to feature at no additional cost. Now here's the different plans. Gain access to our team of licensed financial experts, and they tell you for each particular plan how much the annual fee of the amount that you have in your account, 0.440%, 0.50%, so on and so forth. Now, The first original one, which they tell you is up here. This is the one that I started with, which is only 0.25%. And we'll get into the plans. Don't let the plans confuse you. I started off with the 0.25%, not the 0.4%. They're different plans, and you have to pick the plan that's best for you. And as I always like to note out, frequently asked questions, okay? Where are the fees taken from? They tell you that. Is there a fee for a zero balance? No. If you have no money in your account, they're not going to charge you. Which accounts are included in determining my qualification for the plus or premium plans? There you have it. Are there fees for deposit withdrawals? No. Our annual fee covers everything. You will not be charged any trade or transaction fees. Can you cancel anytime? Yes. What if I have $2 million in my account? You will not be charged a fee on any additional investments above $2 million. The more you invest, the lower your effective fee rate. So let's see how it looks inside of Betterment. All right, guys, here we are inside of Betterment. As you see, I didn't deposit. I have mine actually on automatic deposit. A lot of things I have on automatic deposit. I could have started off and put money in there, but I just want it on an automatic deposit. That's the way I have things set up. That's me. So it tells you how much you have in your actual account, total Betterment, your total net worth based upon the money that you're growing and the amount you have in there as well. Then all these other subtopics here that you can actually go in and research to get a better idea. And they tell you how to start or rollover, add goals, or do your additional RAs. Now, certain accounts they have is this: built with recurring deposit. I have it on because, like I said, I'm doing recurring deposit every month. They said that my build wealth, that I'm on track. And here's a hover. On track means you have at least a 50% chance of meeting your target. This is based on the assumptions, which may or may not hold true in the future. So it is still possible you will not meet this target. So basically saying is you're on track to meeting your goal, but we can't guarantee it. And as you can tell over here, allocations. Now you're saying, where's that other 10%? Well, the way they do it, they do stocks and bonds. The more you want to be risky and make more money more quickly, they're going to do majority of stocks. So I'm trying to build wealth here. So I have 90% out of 100% of the money that I have going into my Betterment account. 90% of that is in stocks. The other 10% is in bonds. Okay. Now this is going to hit some money in this account around the 15th. Now, here's my second account that I started. And I yet not allocated. I need to go over my finances to see how much I can allocate to start another safety net. What is that? That is what I call the emergency fund. Okay, the emergency fund, the safety net. And see, as you can tell, it's only 40% stocks. The 60% will be in bonds because bonds are safer. It won't lose money. It matures over a given particular time. Just depend on what particular bonds they have inside of Betterment. But that's just a gist of two different sorts of accounts, which they have many more IRAs and so on and so forth that we can go and actually look into. So let's go up here to the top and let's hit transfer. What I like about this is you can do a new deposit from a different bank. You can also roll over an IRA or 401k inside of your investments for them to manage that as well. Or you can withdraw. That's going to the portfolios. Now look at this. Now you're looking at how things are set up. Here's my total balance. No money is at the account. My risk is aggressive, okay? This is the relative risk level of your target allocation considering your time horizon of 12 years. You can adjust your allocation or time horizon on the advice tab. And this is where it's showing you. This is what I like about when they say transparency. Transparency. They're telling you what they're investing in, how much they're investing into it, and the allocation given 100% markup. So emerging bonds at the bottom here, 1.6%, okay? And as you read from top to bottom or bottom to top, you can see it equals 100%. As I stated before, if you look to your left here, 90% of my money is going into stocks. 10% of my money is going into bonds because this is my build wealth account. And down here, if you want why this portfolio, why these ETFs, they will give you an explanation. Now, I don't want to make this way too long because I still want to touch on a few things. Let's go to advice. So here's advice. And it has the same thing. If you look at the top here, retired guy, financial experts, these are hyperlinks that you can also hit to get more information. And there's a screen that I didn't state before, but I'll state here on this screen, is that anytime you want to change your portfolio, it's here in the top left. You just click down, and then you choose that particular safety net. So it tells you that it's an individual account, and these are taxable, and you want them to be taxable because you want the IRS to get their money, the government to get their money. That way, when you take out your money, it's already been handled with your taxes. I have a 12-year goal, and I'm only depositing $50, okay? And my target is $10,000. So recommended 12 years, and then recommended I put in $47.02. Now I'm going to raise this. I really want to see how well I'm going to do with the little bit of money I'm putting there. Like I said, all of these things are practically new with Stash and Betterment, and people have been raving about how great they are. I believe that Betterment came out in 2013, but it's been out for a couple of years. But personally, I'm not going to throw all my money in here. I actually want to see what it's all about, okay? And what I like about this graph here, you can follow me. Look at this. It gives you the chance of having at least this amount of money based on your deposit. And you can go from 2018, 2020, stay within the graph, so on and so forth, all the way out to 2030, okay, or 2029. And it also gives you other definitions, explanations, why goal-based investing, so on and so forth. Well, let's look at this other portfolio I have, the safety net. And I'll show you the difference. I don't have anything set up. So my goal is 28,860 of a safety net. Now I have other accounts that I have my safety net in, and I want to make this 6 months, okay? I want to make this 6 months. And look at it, automatically updates. And it says recommended 50 years. Time in years, this is 6 months. This is time in years. Oh, wow. Okay. So let me go back to a year. Monthly auto deposit. Let's just start off with 100. And then I can do a one-time deposit. And they're saying my monthly deposit to get my goal within 1 year, it needs to be $2,397.44. Wow, what a big goal. And as you can tell here to the left again, my risk level is moderate instead of aggressive. My stocks are only 40, where my bonds are 60 because they're safer. Average market performance, I'll get $1,221, given the base time of that time there, which is a year. Poor market performance would be $1,082. And they also have the follow along graph here that gives you projections all the way out through your year that you put. My other one was 12 years. This is 1 year. So let's say, for instance, I just do what they tell me. Recommended 16 years. Okay. So here I'm at 16 years, and they say recommended $98 in 16 years. Now, for some people, this is very feasible. 16 years. So if you're 20, when you hit 36, you will have almost $30,000 in your account. This $100 a month. So if you're working at a fast food restaurant or small tail retailer, just $100 a month, $50 a paycheck, and in 16 years, when you're around my age, you're going to have $30,000 just sitting there, still investing or saving. This is a must-win for anyone who wants to start to invest in Betterment. You start off with zero and you build your wealth. You don't have to go fast. You can start off with very little. The point is just get started. This is a must-win for anybody. So you need to start now. You don't have to start larger. You can do $25 a month, $50 a month, $100 a month, whatever you can afford to start and invest in yourself. No one's going to take care of you except for you. You need to start building your wealth. And this is the thing. The reason why I'm giving out all this information, because you need to diversify. Do Stash, do Acorns, do Betterment, do Robinhood. Invest and save. Do Allah. Put your money in savings where there's no bonds or stock. It's just you saving your money and they're giving you 1%. This is very important for you to do for yourself and for your family or your future family. This is Ross World. I'm out.